Hello, everybody. Kirk Spano, margin of safety investing, fundamental trends, and owner of registered investment advisory, Blue Mound Asset Management. Going to take a look at this week's stocks of the week. I had the chart for one of them up already, and we'll take a look at that. Very simple stocks of the week based on our plug and play stocks of the quarter, which are our focus stocks. Plug and play earnings this week: Kinder Morgan, Tesla, AT&T, Fifth Third Bancorp, and Freeport-McMoRan. Other earnings this week that I'm going to make sure I pay attention to that are all pretty interesting. Several bank stocks on here. You have Netflix, you have Lockheed Martin, Prologis, which is a industrial REIT, and a couple of other ones. Iridium, because that's important to know that industry since we are investing in AST Space Mobile. So just going to keep an eye on these this week. Did the screen for oversold and overbought. Basically all the small caps still, oversold and under short attack in many cases. So when those short attacks exhaust themselves, those stocks will pop. Ametis got some word this week about their new contracts in India. I believe it was $34 million this quarter of new revenues for biodiesel. Plug and play and VSL overbought stocks: First Solar, Merck, Marathon Petroleum, NVIDIA, and Pulte. I don't think that any of them really have to be sold outright, but when we do the retirement income options article tonight, which should have been this morning, but it'll be tonight, I have a couple of things that I promised Seeking Alpha that I would do for them. You will have covered call opportunities on these, I think. The VIX is unusually low. It's not super low. It's not below 10 like it was in 2018 when we bet on a pop and made 5, 6, 700% on those call option trades. But usually when the VIX is very low, that can be pretty dangerous. So if we just take a look at this chart here, you can see that getting below this orange line usually means you're about to see an uptick in volatility. So do we get all the way down below here? There's a lot of people selling vol. Well, selling vol is what we saw in here. So people were selling the volatility. They were selling calls. They were selling puts. Actually, they were buying puts. So they just kept on pushing volatility down. And right in here, I wrote an article that said this can't happen. This can't last. And when it got down to 12 and 11 and 10, we started buying calls on the VIX and got this big old spike a month later. Now, if volatility gets way down to this orange line, then I think you pretty much have to start betting on it to reverse. At this point, I don't think we're quite there yet, but we could get really close. If we get under 15, then we probably start selling puts to collect the premium. So we are really close to this meaning something. Right now it could go up, then it could just start going back up. But if it keeps coming down, if it touches that orange line, then selling puts is going to be a pretty interesting trade. Because even if the puts are assigned to us, so what? Then it's okay. We just know that in a month or two, we get our money back because there's no way that it can hold down here terribly long. Now, I want to wait till we hit this orange line because if all of a sudden the Fed says something nice, the earnings come in better than expected, whatever, these traders can push things a long way. And I don't think we're going to see 10 on the VIX again, but boy, oh boy, if we did, then we'd be buying some calls because that would be a really good reversal waiting to happen. But in general, when volatility gets this low, that usually is bad for stocks after a little while because there will generally be a reversal. So just keep an eye on this. This is pretty important now. Of note, next week, I will be doing an interview with Wolf Financial in one of their spaces. And here I have a very shameful admission. I hate to tell you this, but I paid for the blue check mark. It's just a business decision. And hopefully, I know, can you believe it? Somebody called me a traitor. In any case, I should be getting a blue check mark here later today or tomorrow. I did pay them their $84 a year, and I did it because it is noticeable that they throttle you if you don't pay for the blue check mark. So you have to pay for the blue check mark to get any type of exposure. Seeing as I have some pretty connected people that I follow that are inviting me to speak, I figured I should get the blue check mark because maybe it makes me that $84 back per year, right? That's what it comes down to. So anyway, back to volatility and back to the plug and play stocks. So if you're new, and I know we have some new subscribers, make sure you take a look at the plug and play stocks. Everything that you have to know is over here on the resources tab, and then also in the getting started articles, which are older articles, and I'm in the process of refreshing those. But here's your watch list. Here's the Global Trends ETF quarterly update, plug and play quarterly updates, right? These are our focus stock list, 20 to 30 stocks that we really want to focus on. There's another 150 up in here that we keep an eye on just in case we want to add them. And it really comes down to, what do we see in those businesses, and are they becoming oversold or overbought? So we have this screener over here at TradingView, which allows us to screen based on different time intervals. Most people see relative strength index and their other indicators based on the daily charts. But of course, most of you aren't swing trading, right? Most of you aren't trading a lot. So we use different time frames. The weekly interval is really good for writing cash secured puts and covered calls. So when a stock gets overbought on the weekly, that generally means you can sell a covered call. And here you see NVIDIA and Pulte, which I mentioned a few moments ago. You flip it over, and now you start to see all the oversold stocks. And presuming these aren't on their way to being even more oversold on a longer term time frame, which would be the monthly, you can use these to sell cash secured puts to help build your position. Innovative industrial properties is one we've been talking about. When you go over to the monthly time frame, you can see these stocks are oversold on the monthly. And if you like a business and it's oversold on the monthly, you really, really ought to be getting super interested in maxing out your position based on your asset allocation goals. All right. So Rocket Labs, this is the relative strength index, and relative strength index is your shortcut. It was oversold on the weekly back in July. It was also, sorry about that, just oversold on the monthly. And what can you see? It's starting to come back. So probably that price over the summer was its low. It was under 4 for a hot minute. And now you're starting to get a chance to buy it. So when it's oversold on the weekly, or getting close to oversold on the weekly like it is now, probably a good spot to buy it. Take a look at the price. And there you go. You can turn this into a daily chart to give you a little bit more clarity on the short run, right? So in fact, there's April. That is December of last year, way up here. So it's still come down quite a bit. And I think this is illustrative of how long it takes for these prices to bottom out. So even though the relative strength index is telling you to start accumulating, it took a while to do that. But you can see that the waves pretty much match, right? So you get just a little bit of notice from the relative strength index and these other signals of what you should be doing with this stock. I would say that it's below bottom fishing. I think that you're starting to get real value hunters here, people with strong hands. I think the volume indicates that. And this is where you want to be selling cash secured puts and accumulating Rocket Lab stock. What is one of the things that we know about the space industry? What is there a shortage of right now? Somebody knows this. Launches, that's right. So there's a shortage of launch capability right now. And that means that Rocket Labs, which is adding launches, is probably going to do pretty well, seeing as there are thousands of satellites that want to get up over the next 3 to 5 years. So I think that Rocket Labs is do very well by soaking up some of that launch demand. And this is a stock that, we waited for. I talked about this stock over a year ago, and we just started accumulating it. So our technical signals are working. The stock is starting to move in an upward direction. I don't want to say lift off because, it's a rocket stock, but I think that we're probably going to see any short squeezed out of this. I think the strong hands are taking over, and the long-term investor, the one who really is and truly is a long-term investor, not just calls themselves a long-term investor, but I mean really is investing for 3, 4, 5 years out and longer. This is probably one of the best stocks that I see out there for this emerging space economy. Granted, the space economy is going to take a long time to develop, but as I mentioned in the interview with Seeking Alpha late last week, that's probably the next mega industry. So right now we have fourth industrial revolution, which includes AI and clean energy, which are the two giant secular moves over the next decade. And space is, out of batting practice and probably in the first inning. And that means there's a lot of things that can happen before we really hit the inflection point on the S curve. But I don't think we are 10 years away from that inflection. I think we are 3 to 5 years away on that inflection. And these prices really are just going to keep getting pulled upwards on all of these satellite and space stocks as more people become aware and as it becomes okay to invest in them, because a lot of them were SPACs. So that has to fade away. But, a lot of these stocks are down 60, 70, 80, 90, 95%. And they have viable businesses. They're adding revenues. Their CapEx is essentially covered by cash in many cases. So there's just not a lot of downside here, short of the aliens getting irritated with us for going out in space. If you haven't been looking at this earnings calendar on Seeking Alpha, I have made 2 suggestions for them to improve it, but it is just an outstanding calendar. I haven't seen anything this nifty anywhere else, and I'm using it now. I have gotten rid of all my other calendars, even the Bloomberg one. I use this one, and you can take a look at earnings per share, revenues estimates, what they did, last quarter, what the estimates are, and this analyst revisions and ratings. Do you know who got famous for that? Zacks, right? So you never need to buy Zacks ever again because we got it right here. The premium service, and I think you have to have premium Seeking Alpha to get this. If not, then it's just a giveaway. But Zacks costs like $1,000 a year. So if you can get, this for $100 or whatever it is they're charging nowadays for premium, I mean, it's a no-brainer. This Seeking Alpha took the suggestions from the investment analysts like me, and they've really been doing a lot of good stuff here. So, make sure you're using this because you want to know what your companies are doing. You want to say, okay, what's Freeport McMoRan doing? Well, here we go. So Freeport McMoRan's report is on the 20th, shortly after Rio Tinto, because Rio Tinto, I believe, is Wednesday morning, and then Freeport McMoRan is Thursday. So let's talk about some more of our stocks. I love Ametis. I get people asking me about it all the time. This is the interview from last week. Ametis secured $34 million contract for biodiesel in India. So that's going to be profitable to the tune of, I believe, $7 or $8 million straight to the bottom line. So there you go. They're probably going to get more contracts that are bigger. The law in India is that they have to buy biodiesel, and right now they're oversubscribed. So the Ametis biorefinery in India is going to run at capacity for a very long time because it's going to take, according to estimates, about a decade for India to meet their biodiesel goals. If you were watching, who was it? If you're watching Chevron today was on Bloomberg, and they talked about biodiesel and renewable natural gas. Who does that remind you of? So keep an eye on those. They're worth paying attention to. Kinder Morgan, for you dividend hunters. Somebody asked me, what is Richard Kinder going to do with the company? I think he's going to die owning all those shares because the government, the Congress, doesn't seem to have any will to get rid of the step up in cost basis when you inherit. And I think they should limit it to $1 million or $2 million, but they don't ask me. So that means that when Richard Kinder dies, there'll be billions of dollars available for his family and his charities. My guess, because the step up in cost basis essentially will eliminate the capital gains taxes at that point, is that's when the company gets sold. So who knows? Maybe Richard Kinder lives to be 120. Maybe he's, going to expire tomorrow. Who knows? But I would just point out that that's a pretty good trend. And it's not sharp to the upside, but at some point you get a good rally into the 20s. I think that this might be the last time to get Kinder Morgan at $17 or cheaper. I think that selling the cash secured puts, the $17 cash secured puts for a few months out is a no-brainer. I think that you want to own the stock, so I'd probably also set limit orders to buy it at 17 or 16.50. You can keep an eye on it depending on your style. If you just set a limit price every week, or are you looking every day? But I do think that anything under 17 has really been catching a bid for a couple of years now. And a lot of times it's Richard Kinder buying the shares. If you get lucky and it drops down here to 15, and we did this, we bought it twice in the 15s. That's kind of a back up the truck sort of moment. They report earnings, I believe, tomorrow. Tesla is also this week, and I talk about it in the article, but I think that we are getting very close to wanting to buy Tesla. Now, I probably should have bought it here, right? But you like to know that it's probably bottomed out. And I think that it's probably bottomed out. I don't think we get a price, at 112 or 113 again. But if we can get a price in the 120s before it starts going back up, I think that it's probably worthwhile. The bull cases for Tesla are many, but we do know that the stock probably got way overvalued, and I told you that while it was happening. We are getting to the point where we are going to probably get a shot at Tesla at fair value. And the argument again on EVs is that there is so much pent-up demand for new cars because people haven't been buying new cars because everybody is waiting for the EVs. And the EVs come in 2026 in mass. That's when all the factories are built. And the one thing that the bears keep saying is that there's not going to be enough lithium. Goldman Sachs says that's not true. I agree with Goldman Sachs. Why? Because I don't think heavy transportation, which goes into the demand estimates, is going to go to lithium. I don't think you're going to see fleets and fleets of EV semi-trucks. I think that eventually, because electrolyzers are coming on the market now, and the supply of green hydrogen looks like it's going to go through the roof, all the estimates are that we are going to have so much green hydrogen, which the fossil fuel companies are getting into, that you're going to see heavy transportation, including jets. Rolls-Royce just had proof of concept on that, going towards hydrogen in the 2030s and 2040s. So it'll start with the trucks and maybe some buses and things like that, but really over-the-road vehicles. I think trains probably go hydrogen. I think ships probably go hydrogen. And eventually, because you keep airplanes a long time before you refresh them and change engines and things like that. But Rolls-Royce is trying to have a plug-and-play approach to that. You're going to need regular jet fuel into the 2030s, but sometime in the 2030s, you're going to see jets go green hydrogen as well. So what do all these things going green hydrogen mean? Well, it means not as many EVs. It just means that there's less demand for lithium. And because we'll probably exceed on the supply estimates and come in under on the demand estimates, the bears' arguments are going to be really, really pretty destroyed when it comes to their anti-EV thoughts and their supply chain thoughts and their commodity super cycle thoughts. The one thing that we've learned from history is that when there's a demand for commodities, the squeeze period is usually very short, and then it's followed by a period of over demand and lower prices. And that's coming to energy because of solar, because of green hydrogen, because of improvements in technology on the batteries, all these things. So Tesla, just like Ford, which is my other end of the car barbell for me, is probably going to see a pretty dramatic rebound because as they add plants in Asia, right, China and India, and I don't know if they'll ever do the one in Germany, but who cares? I think you're going to see huge penetration into the emerging markets, which is a theme of ours. That's where the growth is going to be. And they're going to sell a lot of $30,000 Teslas around the world. And it'll be a Model 3 or a Model Y. Maybe one will be 29,000, one will be 39,000, but the costs are coming way down. And they're going to be like Apple was here years ago when Apple was primarily upper income. Now everybody has an Apple. Apple is 60% of the market or something. Tesla is going to be like BMW was here in the United States, right? Remember when all the yuppies are buying 3 Series BMWs? Same thing's going to happen with Tesla around the world. Is the yuppies and the people who are better off, right? The top 20% of society are going to be buying a lot of Teslas. Everybody else is going to be buying Fords and GMs and Kias. I think Kia's got a pretty good future. Kia, Hyundai. Right? I think Japan is the one that's got some problems right now when it comes to the cars anyway. Their banking system looks like it's picking up a lot of what Hong Kong left. So when this gets down, again, I hope that it sets a new low. That would be outstanding. Keep an eye on this because I think that Tesla probably is $1 trillion company again at some point. It's not right now, but it will be eventually. And the kicker here, and the reason I really want to own Tesla is what? SpaceX. I want a piece of SpaceX. If anybody was watching TV today, you saw that the rocket launch got scrubbed and they had some leak of something or something was too cold. I don't know. Above my pay grade on the engineering side. But you're going to want a piece of SpaceX because of everything they've already done. Not even because of what they're going to do, what they've already done. So Tesla, owning Tesla shares is part the cars and part the advertising revenues and part the insurance company and all the other things that Tesla does, but it's also SpaceX. So we really want to find what the buy point is. Man, if it gets down into the 70s, I will buy a semi-truck to fill up my shares. Right here, I'm just filling up an SUV. One of the stocks on our radar is Teladoc. As I've told you, it's vital that we have deflation in healthcare. If you watched 60 Minutes last night, then you saw what AI is doing in healthcare. But remember about a year and a half ago, I told you that an AI, DeepMind, had gone through all the proteins in the body, mapped them out, structured them, and figured out what they do. That was something that we had anticipated would take 2 generations of scientists to do. We thought it was going to take 30, 40 years. And an AI did it in 2 weeks and was over 90% right. Now they're just tinkering at the edges, which ones are the harder cases. That was a pivotal event in personalized medicine, something that we've been looking for because of breaking down the genetic code. But now that we have the proteins figured out, we jumped 30 years probably in doing personalized medicine, being able to cure all sorts of things or at least treat them. But the problem was, as always, cost. So the data that Teladoc has, not just being able to call a doctor on a video conference, right? Could have done that with Zoom. Teladoc systems collect a lot of data. Imagine what happens with all that data, what it can be used for diagnosis and treatment plans. What does that do to the cost of those plans? Now, all of a sudden, the AI is doing 80 or 90% of the diagnosis and treatment plan work that the doctors are doing. So now the doctors can work on implementation versus sitting there trying to be Dr. House and figure out what's wrong with people, generally through a process of trial and error, which can be very unhealthy in and of itself. So the AIs are getting 80 to 90% right immediately just by plugging in all the symptoms. Imagine the data plus the AI, what it can do. So Teladoc is a treasure trove of data, just like United Healthcare is and some of the other insurance companies. There's going to be massive deflation in healthcare. And this is one of the only companies where you can buy into that on the cheap, right? Because United Healthcare and the insurance companies are expensive already. Now, I don't know if there's one more leg down on this, but I've got Shooter watching it, and his chart was right here. So basically, a price in the 20s is what we're looking for. Well, we're in the 20s. Could it get to 21 from 25? It could. But at this point, I'm going to start selling cash secured puts, try to generate some income. If I can buy it at 21, which is what it looks like the primary wave is at, 21, 22, I'll do that. The price target's way up here at 90 something. It's a pretty good return for what could be just a couple of years. I mean, we really could see a four-bagger on this in just a few years. So keep an eye on Teladoc because it's a major theme. It's right into the secular trends of demographics. What we need to do to not bust the economy from being overweighted by healthcare costs as the baby boomers get older. All right. NVIDIA, Pulte. NVIDIA, Pulte. Hard to tell the difference, isn't it? NVIDIA, Pulte. Pretty similar charts. I don't think either one is about to break out. Okay. I think NVIDIA maybe have a little bit more upside. But if I owned NVIDIA and Pulte, which I don't, I would be thinking about, okay, how much money have I made? Should I trim a little bit or should I sell covered calls? I have a couple of client accounts that have NVIDIA, and I'm going to look at selling covered calls if it rallies to about 300. So it's not there yet, but it's on the radar. Pulte, I think you can sell covered calls right now. I think higher interest rates and really just higher interest rates are going to kind of cap this stock out for a little while. I would hope to try to get it back down around 40. In the 30s would be awesome. But I think this is one that if you own it, you could probably trim it for sure and sell some covered calls. AT&T, I meant to have that back here. But this one reports earnings this week. They've been talking a lot about the 5G, which will do what? Give them penetration into the emerging markets. I talked about that in the article. The upside for AT&T to be able to have a mechanism for doing cell phones, right, to have the signal go from the satellite to the cell phone all over the world is not taken into account in the share price even a little bit. I don't think that you can really lose with AT&T. There's only a handful of companies that do what they do on the cell phone side, only a handful of companies that do what they do on the fiber side, and only a couple of companies that do what they do on the transatlantic and trans-Pacific data that travels by cable under the ocean. So you're looking at a company that could go from being mainly North American, right? They have some spots in the Caribbean and whatnot, but this could become a global company with penetration into Asia and Africa, the places where 2/3 of the growth in the world are going to take place. So if they can roll fiber to those places, which they can because of their cables, and cell phone service, think about that. They have a partnership with American Tower, yeah, right? AMT is all over the world. They're also invested in AST Space Mobile. American Tower is. AT&T just has agreements with them. I don't know if they own shares. I don't think they can afford to do that just yet. But the thing to remember about AT&T, and if you've taken a look at their balance sheet lately, if you've taken a look at the debt and how it's structured, it's long-term debt at very low interest rates without any major maturities for like 3 years. AT&T is probably going to start buying shares back in 3 or 4 years. They've already talked about it. The churn on cell phones is super low now, right? It's a mature industry, and they all operate in a pretty similar price range. You can't really switch carriers anymore and save much money. They can try to freshen it up and make it look different, but in the end, you pay about the same for all of them. Maybe a $10 difference per month if you go to, say, T-Mobile. But then you're losing a lot of coverage with T-Mobile. They can talk about their great network, but I'll tell you, I've had the 3 major carriers, and Verizon and AT&T are definitely, available. You're more likely to get a signal in more places with those two. So, especially out east for Verizon. So, if you want a 6% dividend or whatever it is right now, and a stock that literally could triple in the next decade because it goes from being not global to being global even more, and I think you probably are in really good shape. Yeah, somebody mentions that I already had listed a TDOC cash secured put. Yeah, I don't know if it actually got to $2, the one that I was looking at, but it's definitely something to keep an eye on. Just keep an eye on TDOC. I think a price of 20-ish is pretty good price. Somebody asked about is Lumen a takeover candidate? Yeah, I think that Lumen is trading for less than their book value. They need to slice and dice that company and be done with it. They've been doing it a little at a time. Again, I think that a lot of it comes down to executive action. Did they finally change CEOs again? I haven't really been paying attention, but I've always just thought that Google should buy CenturyLink/Lumen. We'll see. Somebody asked me, is 23andMe a significant DNA data and health correlation takeover target? I don't think so, because DNA is not that big of a deal. I mean, right? That sounds funny, but it's just not that big of a deal anymore. the pathway to personalized medicine wasn't just DNA. It really was the proteins. The DNA data is out there. It's the proteins. How do they work in your body? I would venture a guess and say the two things are going to happen over the next decade. And the odds of me being wrong are pretty slim. First of all, we'll start to see healthcare deflation by the end of the decade, around 2030. The data and the technology is that good. The AI basically getting rid of the doctor shortage for us is a big deal. Now, we need way more RNs, way more therapists. And you always are going to need a surgeon that can operate the robot that's actually doing the surgery 80 or 90% of the time now. So as long as we can replace the doctors that are retiring, we're going to be fine. But reassigning their duties to be more integrated with the actual care plan versus sitting there and trying to be smart and figure things out. The AI, if you watch 60 Minutes, he made a statement. He goes, look, everybody's going to have an assistant that's smarter than them in the future. Our job as humans with AI as a tool, right? And that's really just all it is. Humanity has always created tools to make our lives easier. So long as the AI doesn't destroy us because it somehow becomes sentient, which I don't think is going to happen, AI can do the processing that we spent a lot of time on. We still have to ask the right question. We still have to know what it's saying to us. We still have to understand how the research was done, how the answers were come to, make sure there's no hallucination, right? Because AIs hallucinate. And what we're learning is that AIs are only as good as the data they're given, which means that the same frailties that humans have, AIs have. They are subject to propaganda. They are subject to bad information. So what we are going to need to learn to do with AI is train it based on a good data set. The fact that ChatGPT is just out there on the internet and Chaos GPT, if you saw the post in the chat room at Margin of Safety, I popped it up there. Chaos GPT is an AI who is told to try to figure out how to destroy humanity. So it's been trying to figure it out. What was the first thing that Chaos GPT did? Tried to acquire nuclear weapons. Couldn't do that. Chaos GPT has been thinking about this for months now and has come to the conclusion that the way to destroy humanity is through misinformation and propaganda. I think it's mostly right. That's how you get people to do dumb, bad things. So AI is humanity amplified, the good and the bad. And we're going to have to decide at some point whether freedom of speech applies to AI. I don't think that it can. I think you have to control what goes into the AI so it's getting relevant, factual information, especially when it comes to anything data-driven. And you basically have to apply the European rules versus the American rules. I mean, the Europeans have a lot of good rules when it comes to, what you shouldn't say, which is horrible things like the Holocaust didn't exist, right? You're not even supposed to say that in Europe. We let people say it here because, I don't know, we want brain damaged people, apparently. I'm not really sure. But again, slippery slope arguments take hold, and there's validity to those too. How do you find balance? I don't know how you do it with humanity. With the AI, it's what you stick in there. So if the AI is trying to solve an actual problem, which is what they're for, you give it the relevant data that the humans were trying to study in the first place. You just let the AI do it a zillion times faster and probably more accurate with less trial and error that can be dangerous. In healthcare, this will work very well. In finance, we're already seeing where the holes are, what works, what doesn't work. You combine that with the way social media works for the humans, the reflexivity of the things that are going on are amazing. That's why when you see some of these stock charts, you go, why did it do that? And one of the things I would point out is just look at the AT&T chart. Look how it goes up and down. And it's basically still in the same place. Here, people are going to ask me why it went down. Here, people are going to ask me why it went up. What's the answer? Traders being traders, right? Basically ended up same place, essentially range bound. Question we have to ask, is this more indicative of a bigger pattern that's going to drive it up? And the way you figure that out is by knowing the fundamentals. So while these charts can help you trade a little bit, these big shapes that are taking place are fundamental driven over a long period of time. If you truly want to make a lot of money, think in terms of the long game. You try to think in terms of the short game, right? You try to be a superstar trader. Well, there you go. You're not giving yourselves much room for error, because most people trade too much of their portfolio and they overtrade it. If you're going to trade around the edges and err on the side of fewer trades, not more trades. And if you're going to bet on something, make sure there's a secular tailwind behind you. In case you make a bad trade, time will bail you out. And don't bet against good companies with secular tailwinds, because they're much more likely to have a positive surprise than a negative surprise. You want to bet if you want to bet against something, bet against the shit stocks. There's a lot of shit stocks. Don't bet against the top 20% just because, the chart says it might go down for a little while. Why? There's no margin of safety in doing that. Find a competitor to that company that's going to have the same short-term headwind. Bet against the shit stock. All right, let's call it a day. This is where to go. This is the way I'm going to do stocks of the week in the future. Very simple. That way you can see the main ones I'm talking about right in the headline, paragraph or two on the updates. And I'll be doing this every week of earnings. I started last time with a bunch of charts and stuff. Look, this is just easy to follow. Easy for me to throw a couple sentences up, what to look for, and give you some direction on where we'll really start looking to buy. All right. Have a great day, and I will get this up as soon as possible.